Hi everyone, Maria Tyler here. In this short video, I'm going to focus on contribution margins in relation to your assessment. So please make sure that you've read the study guide where it talks about contribution margins, because that explains the background in detail that you'll need to know before you watch this short video. So contribution margins, to calculate them, essentially they're part of cost volume profit analysis, and they're most useful as part of break-even formulas and so forth. But essentially the mathematical equation is selling price minus variable costs equals a contribution margin. Now you can do this as total, so you can have a total selling price minus total variable costs. That will give you a total contribution margin, or you can do it per unit. So in other words, divide totals by the quantity. So selling price per unit minus variable cost per unit equals contribution margin per unit. And that's essentially what we're going to be focusing on with our assignment on a per unit basis. So we know the formula. It essentially, it tells us what each unit contributes towards generating profit, well hopefully profit, but at least covering our fixed costs. So that's why it's called a contribution margin. It's the margin of the sales price of each unit that contributes towards covering fixed costs and hopefully profit as well. If the contribution margin just covers fixed costs, then you're just breaking even. So the break-even formula, which I've listed down here, Maria's formula, it's not my formula. The acronym is my formula. I put acronyms on everything. So the break-even formula just shows you that if you're just covering your fixed costs, you're not generating any profit, you're just breaking even. So hopefully our contribution margins will be positive, i.e. they're contributing towards more than just fixed costs. They're also contributing towards a profit. It varies directly as a fixed percentage with sales volume, obviously. Mathematically, they're related. And emphasising the contribution margin does make your financial statements more useful for decision making. So we can actually restate a financial statement if we have the appropriate information. We can restate it in terms of contribution margins. So we can have our sales less our variable costs equals a contribution margin, then minus all other fixed expenses, and hopefully there's left over for a profit. If you are interested in pursuing cost volume profit analysis, and it's fairly interesting, and I think it's a little bit enjoyable to do as well. I work with a lot of clients in practice when they're opening new shops or doing what we call what if or sensitivity analysis, so forecasting for the future, and we use contribution margin, the break-even formula, quite a bit. So this is where I've actually come up with my acronym. So I go in, I type my B equals FC on CM, and they can remember that, my clients can remember that without me having to be there. So the contribution margin approach is generally worked around this break-even formula, and there's a very simple example that I've put here. So break-even sales in units, basically our fixed costs. In this case, let's just assume our fixed costs for the year, whatever overheads we have, amounts to $150,000, and we've already calculated our contribution margin to be $15, which is our sales price minus the variable cost. So this is our contribution margin down here. So the break-even number that we need to sell in order to cover our fixed costs is 10,000 units. That's a very, very brief example. Now, for your assignments, you don't have to go through to that level of detail. You just have to show us your understanding of contribution margin, and that's pretty much what we're looking for. We want to see your understanding what a contribution margin means to you. So you need to, for your company, you have to think about your company a little bit, and then what sort of products do they have, and then estimate a sales price and a contribution and a variable cost for each of those products, and then calculate the contribution margin and explain it back to us, explain it to your marker. So my company is Wesfarmers, and Wesfarmers, as we all know, and most of your companies will be in the same boat, they have a number of companies that they own. So collectively they produce many products and many services as well. You only have to choose 3. So I'm going to make it easy for myself and go with their Coles company, because I feel like I can really show off my knowledge with contribution margin here. And anyone who's ever worked in Coles or Woolworths or any other sort of grocery or retail, especially the larger supermarkets, you will know that your managers strategically place products based on contribution margins and volumes of sales. So it's actually something that's used quite commonly in practice. So, you know, when you're shopping and you're waiting in the checkout, and next to the aisle, you see some little products that have been placed there. There's a reason for that. So they might be a higher margin on those, or they might be higher volumes, but it all comes back to dollars. So strategic placement of products is used with Coles and Woolies, and since Coles is owned by Wesfarmers, I thought I'll start with that. So I'm going to choose 3 items that are sold in Coles stores. So for ideas, you can go online now. Coles and Woolworths both have the online shopping. So I can go into Coles website and have a look at their products and think about it. Now, a lot of your companies won't be as simple as that, or they may be. I've had students with airline companies, and they're like, what sort of 3 products do I have for these? You know, and I said, well, you know, it's up to you. We really want you to choose your own products that you feel you can show off your understanding of a contribution margin with. So, you know, if it's an airline, you might break it down into services or actual planes that they make, or different types of planes, depending on the different, you know, customers' requirements and so forth. So know your company well. So this is why it's really important to know your company, so you can actually decide what products you can use to best show off your understanding of contribution margins to your markup. So I choose and put some pictures in my Word document, because again, you're communicating this through your Word document to your marker. So make sure that you are documenting what you are choosing. So I'm telling my marker in my Word document that I've gone on the website and I've chosen these 3 products. So Huggies Newborn Nappies, box of 108, Coca-Cola, and some bakery rustic rolls, 4-pack. Now, I don't even have to guess their selling prices because it's all listed in their online shop. So I'm fairly lucky in that circumstance. Again, your company may not be so forthcoming with selling prices, or they may be. You might have to look through the notes a little bit. If they aren't as forthcoming with their sales prices, just make a best guess. So something that you think would be reasonable. So we're not really interested in how accurate you get these prices. What we're interested in is how is your understanding of the contribution margin. So don't get too hung up on getting the correct sales price. But if you can, like I can with Coles, then for sure, put that in. I would even put some screenshots, you know, showing my marker that I Googled Coles online. I've typed in, you know, my search, and I can show them exactly where I've got my figures from. So my sales price of $33. So if you want to and you can find the selling price, that's fine. If not, guesstimate it. Now, this is the harder portion, guesstimating variable costs. So again, use the best product that you feel you can show off your knowledge. Don't get too hung up again about getting this right. If you can't find a cost, and again, companies usually won't be forthcoming with this sort of information because it's considered part of internal accounting or management accounting, which is basically for people working within the company who are privy to confidential or more confidential information, then just guesstimate it. So if you can't, in this case, I've also guesstimated it as well. I'm guesstimating a 90% variable cost because usually there's very small margins on high volume items, and Coles and Woolworths and big companies, they rely on the volume to get through their sales dollars. So there's usually, with high volume items, there's usually a smaller margin. So I'm guesstimating 90%. I don't know, that's just my best guess. And I'm telling my marker this in my Word document. So let me just guesstimate these variable costs on each of my 3 products. And now it's just a matter of doing some simple mathematics, taking my sales price and my variable cost and taking one away from the other. So for each product, I tell my marker this is how I'm doing it. Sales price minus variable cost. So my contribution margin for my Huggies Newborn Nappies is $4. Coca-Cola is $3 per 24-pack. And my basic bakery rustic rolls contributes 50 cents per 4-pack that is sold. So now, don't forget, just calculating it, that's not just it. I would actually go on to explain, what does this mean? What does the $4 and the $3 and the 50 cents mean? Well, this is the amount that each of these products, so every box of 108 nappies that's sold, contributes $4 towards Coles' overall fixed costs. And the fixed costs for Coles might include the buildings that they have to establish, so the depreciation on those buildings, the insurances they have to pay, the electricity, any of the fixed overheads that they're stuck with, or leases on the buildings. All of those fixed costs, these are what these individual contribution margins are contributing towards. So they're contributing towards paying those fixed costs and hopefully, in addition, generating some profit. And as we've seen with Wesfarmers, they are generating some profit over that. So take the opportunity to show off your knowledge to your marker. So that's calculating them. Don't forget the other bits as well. So discuss why the contribution margins for each of your firm's products and services might differ or be similar. So again, I can look at similarity or difference. So obviously the bakery rustic rolls, there's not too much margin in that. There's a smaller margin in that. And that might be because of the consumables that are required, as opposed to this one, which may just be purchasing and selling it on behalf of Huggies. So this is pure retail, wholesale retail, whereas this one's actually baked in-house and so requires more consumables. So I might actually discuss and start to break down my products. And again, it's an opportunity for you to show your marker your understanding of contribution margins. Why might your firm produce a range of products and services with different contribution margins? Why not only produce the product or service with the highest contribution margin? Can you just imagine if Coles produced one product with the highest margin? Wouldn't allow us much choice, would there? And we all know that choice is very important in the consumer world. So again, it's about opening and broadening your target market. So you can discuss all these sorts of aspects, and hopefully it makes you think about it too, which is the whole point of the assignment. So explore that, and so do some, this is part of your learning journey. Explore it and then explain it. You also have to look at constraints as well, so don't forget those. There's marks allocated for that as well. So identify or guess one or more constraints that your particular company might face. Any market constraints you feel might impinge on your firm. Discuss in what ways these constraints might be relevant when deciding whether or not and how much of the 3 products or services of your firm that you've identified that they should produce and sell. So again, with my example, constraints could include anything from inventory levels that they have to hold, because again, holding stock is a cost. Supply chain is interaction. So again, Huggies or Coca-Cola mandates that you must sell at a recommended retail price. Competition from Woolies and other large independent grocers, and also the general economic condition in Australia. So I might discuss how each of those constraints affect my 3 products and services, and how Coles offers those and why they offer them. So that's pretty much it. I don't want to talk too much more. That gives you an idea of how you can address this aspect of the assessment, and I hope you have a lot of fun with it. Happy writing.